an update of what's happening with trusts in the taxation system. And it makes me ask the question, is the government trying to strangle trusts? Okay, there's two topics to cover here. First of all is this new regime of TFN withholding tax and TFN reporting for trusts. And the second topic that I've got to talk about there is about the streaming of capital gains and franked dividends from trusts. So discretionary trusts that operate family businesses and so on now and hold investments for people often split their income with streaming different types of income to different beneficiaries. And there's some new rules that have come in to effect regarding that streaming. Okay, TFN withholding and reporting. These rules have been in the legislation for some time, but have really come into effect significantly from July 2011. So what is now required is that a trustee is obliged to request from a beneficiary their tax file number and some personal data before they distribute income to that individual. They must have that on file. And the personal data includes things like their first and last name, their address. It's quite detailed personal data. And of course you must have your tax file number. Now in a close family group, that's probably not too much of an issue, but it is required once that information has been obtained that it is reported to the government within 28 days of the end of the quarter where a distribution happened. And if the trustee doesn't have the information, then they're obliged to withhold tax from the distribution. Just like you have interest withholding tax that applies if you don't provide your tax file number to a bank. If there's a foreign person that owns Australian company shares, they may be subject to dividend withholding on their unfranked dividends. A trustee will have to withhold income unless they've got those details. And then they're also obliged to lodge a particular report with the tax office disclosing those details by the 28th day after the end of that particular quarter. It's the similar dates that apply for making sure that you've paid superannuation guarantee. Now, there's a few tricky bits with this because if you might have a particular family group where there's a number of trusts, that same rule applies to every single trust. So that means that you're going to have to apply, and you may need to do a TFN report if there's a distribution coming from a new trust. So it's significant and it's a constraint, and it will require, I think, particularly in the June quarter of this year, some care to be made about ensuring that those TFN reports have been lodged with the government. Streaming of capital gains and franked dividends. This was some legislation that was rushed through and received royal assent on the 29th of June, yet it affected all of the accounting for the 2011 financial year and gave us no time to plan. The new legislation was purportedly there to help taxpayers because the tax office argued that as a result of a number of cases that went through the courts, it was not possible to divide up the income of a trust and send different types of income to different beneficiaries. Those two cases, one of them was the Bamford case, which has been reported by a lot of other tax practitioners. Now that legislation went through, and there's a little bit of a ticking time bomb in it, in that for you to use the legislation to give proper effect to the streaming of capital gains and franked dividends, there's this requirement that the specific entitlement of that particular beneficiary is recorded in the books and records of the trust in the case of a capital gain by the 30th of June in that year. And in the case of franked dividends, strangely enough, by the end of August. I don't know what they made at two different dates, but there are two dates there, the earliest one being the 30th of June. What that effectively means is that trustees will not only need to resolve the distributions by that date, but they also need to have the minutes done up and signed off and in the records of the trust by the 30th of June. So, there's a couple of fairly bureaucratic changes that have happened there, and I think it's just one of those steps towards making life difficult for trusts.